This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performances do not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk. There's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading.
Good afternoon, everybody, and welcome to the market wrap for March 21st, 2007. In the news today, U.S. stocks rallied after the Federal Reserve left interest rates unchanged as expected and said that recent economic indicators were mixed, boosting hopes that the central bank might eventually be open to cut rates. In its weekly inventory report, the Energy Information Administration said crude stocks ballooned by 4 million barrels last week. Analysts expected an increase of 800,000 barrels. But gasoline supplies, closely watched ahead of the summer driving season, fell by 3.4 million barrels, twice as much as expected. Distillates, which are used to make heating oil and diesel fuel, fell by 1.7 million barrels. Mortgage applications fell for last week for the first time in 4 weeks, reflecting a drop in demand for home refinancing, even as interest rates hovered near recent lows. The Mortgage Bankers Association said its seasonally adjusted index of mortgage application activity for the week ending March 16th, which includes refinancing and purchasing loans, decreased 2.7% to 671. Bank of England Governor Gordon Brown, just months away from succeeding Tony Blair as Britain's Prime Minister, cut income and corporate taxes as he sought to rebuild support for the Labour Party after a decade in office. Brown expects growth of as much as 3.25% in 2007, up from 3% in 2006. The figures, in line with his December forecast, exceeded a 2.8% growth 22 economists predict for this year's. Stocks in the news. Morgan Stanley, the second biggest investment bank on Wall Street, reported its fiscal first quarter profits soar 69% on robust trading and strong advisory fees from stock and bond underwriting. Profit after paying preferred dividends rose to $2.66 billion or $2.51 per share in the 3 months ending February 28th. FedEx Corp said a slowing economy, severe winter storms, and lower fuel surcharges contribute to a 2% decline in its fiscal third quarter profit. For the quarter ending February 28th, earnings slipped to $420 million or $1.35 per share from $428 million or $1.38 per share in the year-ago period. Complications due to storm hurt the corporate profit by 6%, but were offset by a gain of 8% a share related to a lower tax rate. JetBlue Airways Corp, which has struggled with weather-related cancellations this quarter, lowered its forecast for full-year operating margin to a range of 7 to 9% from between 8 and 10% previously. Scheduled economics report for Thursday will have the initial jobless claims for the week of March 17th and the leading economic indicators for the month of February. As far as earnings is included for Thursday, we have Conagra Foods, Nike, General Mills, 3Com, Actuant Corp, Jebel Circuit, Bombay Company, Palm, and Williams-Sonoma. This has been the market wrap for March 28th, 2007.